Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, the key levels for both the indices, as well as the sectors and stocks which are in focus in trade today, as well as the next few trading sessions. Before updating our markets, let's just have a briefly look at how the global markets performed in trade yesterday. First, in the US markets, so if you see in trade yesterday, it was a relatively lackluster trading session. All the three indices that is ended on a relatively modest low note, slightly lower. So we had the tech heavy Nasdaq, which ended the day down 0.1%. The Dow was also down by 0.1%, and the S&P 500 dipped by 0.2%. Going forward for S&P 500, the zone of 5500 will be the crucial support, while on the upside the zone of 5620 will act as the immediate hurdle for the index. Coming to Brent crude, so for the fourth consecutive trading session, Brent oil ended on a negative note. Currently it is trading below its short-term and long-term moving averages. Going ahead, any sustainable move below the levels of 79.5 will lead to further selling pressure up to 78, followed by 76 levels. If we see the dollar index, so the dollar index is oscillating near its 200-day EMA level. Any sustainable move above the levels of 104.6 will lead to an extension of the pullback rally up to the levels of 104.90. Now coming to the update regarding our market. So yesterday we had the union budget which was presented. The benchmark index Nifty witnessed an extremely volatile trading session, oscillating in a range of nearly 508 points for the day. This was the highest daily range for the index since 7th of June. During the session, the index slipped below its 20-day EMA level briefly. However, it failed to sustain at the lower levels, that is the levels closer towards 24,100, and thereafter witnessed a smart recovery of nearly 400 points in the second half of the session. Nifty has ended about 24,450 level with a minor cut of 0.12% for the day. If we see the daily chart, it has formed a bullish hammer like candlestick pattern, which suggests clear sharp buying interest at lower levels. Going ahead for Nifty on the spot levels, that is 24,350, 24,330 will act as the immediate support for the index. If the index slips below the levels of 24,330, the next support is placed in the zone of 24,230, 24,210 levels. While on the upside, the zone of 24,570 will act as the immediate hurdle for the index. Any sustainable move above the levels of 24,570 will lead to a sharp upside rally towards the mark of 24,730, followed by 24,840 levels. Now coming to the derivative data, so we witnessed that in trade yesterday the July futures has ended on a flat note, and the cumulative open interest of the current, next and far series has dipped by about 3.66%. Among the constituents of the Nifty index, we witnessed that 11 stocks have seen long built up. We have 10 stocks which witnessed short covering rally, while 11 stocks witnessed short built up and 18 stocks witnessed long unwinding. If we look at the option chain data, that is for tomorrow's expiry, it is also the monthly expiry for Nifty. We have 24,600 strike which has significant call open interest, followed by 24,800 strike. And on the put side, we see that 24,400 has significant open interest, followed by 24,300 strike. If we see the put call ratio, that is the total put options divided by the total call options, it is currently at 0.77, and the max pain, that is the strike price at which if the expiry happens, the maximum loss for the option buyers, so it is seen at 24,450 strike. Coming to the levels regarding Bank Nifty, so in trade yesterday, Bank Nifty has underperformed the frontline indices and it has slipped by nearly 1%. Most noteworthy, it has slipped below its 20-day EMA level for the first time after 32 trading sessions. Currently, the daily RSI is trading below its 9-day average. Moreover, the fast stochastic is trading below the slow stochastic line. Going ahead, the zone for the index, that is 51,400, 51,300 will act as the immediate support for the index. If the index slips below the levels of 51,300, the next support on the downside is seen at 51,000, 50,800 levels. On the upside, if we see the zone of 52,100, 52,200 will act as the immediate hurdle for the index. Any sustainable move above the levels of 52,200 would lead to a pullback rally towards the mark of 52,550. If we look at the option chain data, that is for today's expiry, so Bank Nifty has another monthly expiry as well at the end of the month. Today is the weekly expiry for Bank Nifty. So currently, if we see 52,000 strike has significant call open interest, followed by 52,500 strike, and on the put side we have 51,500 which has significant open interest, followed by the 51,000 strike. For the weekly expiry, that is today's expiry, we have the PCR which is at 0.48, clearly indicating that there is more call writing in the system in comparison to put, and we have the max pain which is seen at 51,800 strike, while for the July monthly series the PCR is at 0.88. Now coming to the key market indicators, so the volatility index India VIX has tumbled by 17% after the budget event. It has slipped below its short-term and long-term moving averages. This significant drop reflects a decrease in market uncertainty and investor anxiety, suggesting increased stability in the market post the budget. However, if we look at the advanced decline ratio, it was clearly in favor of the declining counters despite the sharp rebound that the markets witnessed in the second half of this session. Coming to the key sectors in focus, so technically Nifty FMCG, Nifty Pharma, Nifty Healthcare and Nifty IT, and these are the sectors that are likely to outperform in the short term. Nifty CPSE and Nifty PSE has taken support near the 50-day EMA level and witnessed a smart rebound. They both have formed small body candles with long lower shadow. The long lower shadow indicates buying interest at crucial support levels. Coming to the FII DI data, so FII sold to the tune of 2,975 crores while DIs purchased to the tune of 1,418 crores. FII long short ratio for index futures is at 73.6 on a net basis. This as they purchased about 54,771 index futures. On the stock futures front, FIIs have sold to the tune of 79,114 contracts, while on the options front, FIIs sold 1,59,335 call contracts and sold 63,173 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.